Hello, this is Dave, and welcome to Equities Story. I'm with the amazing Wolf, and this is just a general share advice and not personal advice, as per the disclaimer you can read. Wolfie.
Yes.
Right. Before I start, obviously today's a massive day, because the last final Ashes test.
Oh, is it?
Well, you know,
after we win the Ashes, it's just you lose interest. It's boring.
Mate, there's a lot of pride in this. Like, you know, Australia haven't won a National Series in England since 2001. I think that's not a record I think the boys are that proud of. So I think they'll want to win 3-1. I think it's a real difference coming back as a real winner, right?
Well, I think we can just bat it all out for 5 days. Just 2-1 is good enough.
No, I think he'd want to have 3-1, and Stokes will be happy to have 2-2 and say, no, it's a draw. Right. So I think there's a lot of there's a lot at stake even in this last one. So I think there's lots to play for. So I'm going to be I don't know if I'm going to stop and watch it, but I'll try and watch the first few hours. Wolf. Okay. I just want to say something. Firstly, you know, we put these trades on all the time on Equity Story, and you know, recently, last month we had some American trades, and you know, these ones that you picked and done absolutely brilliantly. And I just want to sort of really sing your praises a little bit on these, right? Because you know, not only have you mastered the CTM, you're playing it absolutely beautifully, right? So AVH, we put on as a trend. It hit our target price, and that was a 19.58% profit, right? So that was very, very, very good. Then you had a PANW, which hit our target price, which made a 15.07% profit, right? This is all in a month and a half, and I think we were looking at these a little bit longer. Then you had APH, which did a nice 10.59% profit. You had FTNT that did a 12.48% profit, and a little trade on NXT, which put in a nice little 4 or 5% profit. And actually, I think it was a very short amount of time, a few days. You know, all in all, Wolfie, there's sort of 5 trades there, averaging around that sort of 12% in a roughly around a month and a half, which is superb use and superb trading of looking at good stories and using the CTM. So again, and this is what we're here for. Now, they don't always work out, and obviously BOE, although looking okay, you know, we had a pretty tight stop on it. The reason being, you know, a lot of guys are still there. We put a tight stop under 3 simply because uranium, you know, we're nervous about uranium. We just don't know where it's going to be. But really, some trades there, recent trades, very, very, very good, Wolf, and well done, sir. So we are going to put out another trade today, and hopefully, again, that could do reasonably well. But obviously, past performances are no guarantee of future.
Unfortunately, not. I wish they were.
And I think while we're on the mood of putting these trades out, Wolf, let's get into it, right?
Okay.
And the one we're liking, guys, is this NXL, right? So, you know, this, you know, it was trading at $11. It's sort of come down pretty heavily, and we're just thinking that basically
they're on a recovery path, pretty much, right? That fundamentally, this is what we're thinking. They're on a recovery path. Sorry, Dave, I'll take over from here.
Yeah. Go for it.
When you look at the actual update, this is from last week. This is what made it pop, right? We've got, so they're talking about FY23 range versus FY22 reported. So previous corresponding period. So we've got 14 to 50% growth in ACV, which is the annualized contract value. So then you've got the statutory revenue up 20%. You've got the EBITDA up 50%, Dave, right? Statutory EBITDA up 164 to 190%. So their recovery is pretty strong. And of course, the bottom line was the ones that was affected because of a lot of one-off costs. They're still paying a lot of money for lawyers out there because they still got a lot of issues they have to work through. You know, so it's not a perfect business. Of course, we know that this is going to be high risk trade, but I think there's a lot of value in this. Remember, this was trading at $10 at one stage. And it's still a business in there that is probably going to be survive, and maybe even someone will buy it out eventually, right? But there is a business in there that's much value than it is right now. So for me, I can see this easily getting to that first non-greedy point of about 189, somewhere there, right? When we were looking at this before. So I think there's a now probably there's a bit of short covering. There's the momentum coming back in the story because of that update. It's going to be volatile. It might, have a day off down -4%, whatever, or, but generally speaking, I think probably within the next 3 months, we're going to probably see that hit 190. So I just think this is a pretty nice risk reward punt here. If you take a high risk approach with a fairly tight stop, Dave, and I'm going to leave that stops for you. So please go ahead.
Yeah, listen, there's sort of two ways to play it. I mean, the trouble is if you play by the trend line, you look at risk reward, it's a 45% drop, right? It was a little, well, not quite. Yeah, hang on, I'll actually work it out what that would be exactly if it's sort of 145 and it went sort of say 0.98. It's about a 32% drop, right? If you had your stop loss just under $1, right? Which is maybe where it should be, but I think we could try and tighten that stop up a little bit.
Yeah.
Because we're looking at risk reward, and we did have a high of maybe 124 a few weeks ago, and I've got a little. I think Wolf, we could try for that. We could try for that stop around 218. Yeah.
Yep.
What I think how we play it, Wolf, is that we like the story and we've got to be on the ball. If it goes below 218, we get out of it. If it jumps back above 120, we just get in. Okay. Maybe if that happens, we just got to be in and out, right? Because I think your theory is right. There's no question about the theory of the stock. I totally get it. But I think we just go a little bit tighter on that stop. So I'm going to do that stop around sort of, I think 118. Yeah. Okay, so if you actually look on that, which is quite interesting, you're at 1.45 now, you're at 1.18, and so that's potentially you could lose 18% on the trade, right? So, but the upside, if it keeps going on, and I think this is what we have to look at, it could be 189. Your upside is double that; it's about 30%, right?
Yeah.
And I think if it goes there, then there's a chance we can dig into that and talk about lifting the stop, and maybe this could be a $2 or $3 stock, Wolf.
Yeah, look, if they recover well, so if they finally settle all these legal issues, if they can show the market that they back as a business that's growing. It doesn't have to grow even like 50%. I'm just happy to grow by 20%, right? Because that's what the original promise was. We're going to growing and never did, right? So they must have obviously had a really terrible way how they're listed. So it is a risk play, but if they can just demonstrate over the next couple of quarters, then yeah, I mean, it could be a $3 stock, right? Look, I'm not greedy. I'm happy with the 189 and see where it takes us. Then there we can reassess if it gets there. If it doesn't work out, It's a pretty strong risk reward story. So I think well worth taking punt. A small one, but well worth taking punt.
Yeah, what's really interesting at NXL? It's actually trading at just below a 500 million market cap, which is actually, in our terminology, is a small cap.
Yeah, that's right.
Right. So I mean, what did this list at? This listed as a large cap at what?
Medium cap. Yeah, it was a medium cap.
Yeah, a billion.
Down to micro cap size.
Which is, yeah, well, not quite micro cap, but small cap. But it's, I think if it breaks up, obviously that will go into a small back into a mid cap. But at the moment, it's actually under our classifications under 500 million. We're calling it a small cap, which is Which again, so I really like that, Wolf. I think that's a really good, sexy little trade, right? Lavisa is the other, and can we just talk about retail stocks?
Yes.
Because you've seen Kogan jump back.
Yeah. On the update.
Yeah, absolutely beautifully, right?
Mhm.
My question to you, I think there's a trade in this possibly as well, right? Again, high risk, but you got a stop loss below that's $6, right? So you're at what, 665? You got to stop maybe about, say, 580, right? So you got a downside risk of 12%, but your upside could be around $8, right? So if you look at that 6.65, you hit $8. Your upside could be 20%. So it's a pretty good risk reward there. My question to you: could Kogan fundamentally get put another $1.50 on?
Absolutely, very easily. And again, reason why it's been in a doldrums, momentum has shifted. You've got a pretty positive, when you look at from the business point of view, update, even though they can't control the retail sales out there, right? And the top line has suffered quite significantly because of soft retail conditions. There's nothing they can do about that. What they can control is the costs. And this is exactly what they've addressed here, right? In this update, that's why the market's getting started. And they're thinking that, okay, they are cutting costs, reducing the inventory, all those things that they need to do to position themselves to be profitable. When the time comes, growth again, right? So I think, again, market's rewarding these sort of type of stories. And you see that with NXL, we're seeing this with Kogan, a bit of momentum. And remember, Dave, there's that thing that stocks always go further than you think they're going to go, right? Up or down, doesn't matter which way, right? Like, we think sometimes stocks should not fall that far, but they just keep falling and falling. Same thing with going up and up and up and up, right? So I don't normally put a limit on these things, but I can see this keep going because the update was pretty interesting from the point of fact that they're actually looking like they're addressing all the issues that they had. And it's working. So yeah, look, $8, here we come.
Yeah, listen, and also I'm going to put both these trades as high risk, Wolf, right? Because they're sort of recovery stocks a little bit, right? But we're looking obviously take the easier money on the hard money. And I want to talk about retail. Well, I've got you on this subject, Wolfie.
Yes.
Because you've also got sort of red bubble, right? Which for me, this is a really risky stock, right? It's starting to pop. It looks a little bit better. I wouldn't be buying this one.
Yeah.
But
I tell you what, this is interesting because yesterday Todd asked me, Wolfie, how do you think of this chart? And I said, nah, way too early, because yesterday was trading at 45 cents. All of a sudden, we've got 60 cents today. I'm thinking, what is going on around here? So maybe I'm changing my tune because I can see, because the question was posed to me yesterday, in a space of a day, it's looking much better, but it's still too early. The quality of the business is just not there for me. But again, in that retail space, and if you look at the bigger picture, so the context of any story, you got to take out and say, is this any different than it was maybe 6 months ago? Absolutely it is, because the context now is interest rates have pretty much stopped going up. So inflation is fairly coming down, right? So it's not going to be as problematic as it used to be. Retailers are probably on a path of recovery, I'd say, because they're thinking that the consumers out there will start slowly getting back venturing out when they're starting to feel more confident that they're not going to be seeing their money disappear with inflation. So I can see the markets getting into it, right? Even though it's maybe a hope trade more than anything else. But with time, I think that the retail will probably improve anyway. So this is not quite there yet, but it is interesting. So I'll definitely put it in my watch list. But Kogan, 100%, I'd be looking at that.
Right. Okay. Just also, I noticed Soul Pats. You see some of these coal plays looking a little bit better. I think New Hope looking a little bit better. Got a little buy signal. So I don't know if we really have to put those, but those more conservative traders looking for something maybe a little bit more
boring. We just put an Excel on, Dave.
No, but the Wolf, there are people that
I know.
obviously like.
I'm just
So
kidding.
we won't put this on officially. Now it's been called boring, but it's worth having a look at for a little maybe a little 3 or 4% if someone's looking for a trade.
I'll tell you,
Okay.
if you've got heart problems, this is a perfect trade for you. SOL.
Okay. Right. Okay. Well said, Wolf. Right, sir.
Okay, let's talk about some announcements this morning because we need to. There's a quarterly season out at the moment, and Macquarie is a big one. So let's talk about Macquarie. And it wasn't great. It was one of the first, I think, quarterlies that I'm fairly disappointed with for a long time because it was just weak, right? Of course, the expectations are pretty high for Macquarie anyway, and everyone's always thinking that they're going to outdo what they say previously, but it's just been a pretty poor quarter. Look, I'm not going to take it too much into it. However, obviously the price reaction has been pretty strong today, and it could be a sell by the end of the week, so tomorrow. But generally speaking, long term, Dave, no worries, unless there's a continuation of that poor quarterly. So we'll see. I think the jury's still. I think it's too early to call that this is finally over for Macquarie, the growth. But anyway, we got to play it by the charts.
Yeah. So obviously, I don't think it's trading at the moment, but we call this a dividend stock, and we've said as long as it sort of holds that
dividend, I wouldn't be worried about it until it gets 160, right? That's what we talked about.
Yeah, that's what we said. And as per the CTM, it's a dividend play, giving it a little bit more leeway, right? Rio.
Yep.
Above trend.
Yep.
Down a little bit today, but I mean, it's holding up, Wolf, reasonably well.
Yeah, I think again interesting because we had the quarterly numbers from them. Now today we had the actual financial update, slashing the dividend, Dave. Oh, this is why it's not looking fantastic. Nobody wants to see the 14% dividend cut down to 10. But we've talked about it so many times over and over again. That's the danger with trading or investing and hoping for big dividends out of the miners, because from 1 year, even from quarter to quarter, their profits can go from 0 to 20 billion, right? That's the thing. And they're not going to pay it out of debt. They always pay it out of their cash flows. But that's the nature of it.
But 10%.
It's still pretty good.
Pretty good. I mean,
I wouldn't go, oh my God, I'm getting out. Of course, you'd be still holding.
Yeah. Thank God for that. Okay. ALK, holding up, Wolfie, and slightly up today on their quarterly.
Yep.
Any sort of interesting sort of snippets on Boda?
No, nothing in there that's new. I mean, the only thing I took out of that was that the actual AASC not that low. It's almost $2,000, right? So look, it's a small producer. Look, I like the fact that it's actually still profitable, still got cash flows, and it can fund its own exploration of Boda, right? That's the beauty about it. It doesn't have to go to the market every 5 seconds on a big project. So you've got something that's decent here. But is it the best gold producer? Of course it's not. It's still tradable for sure. For me, if I'm ever going to be punting on Alkane, it's not about this little gold production. It's about Boda. And one day, Boda will probably either be sold or developed by someone, whether they can extract value for themselves, whether they can spin it off, whatever. It'd be interesting to see. So if you're a long-term investor, holder, you're probably still holding.
All right. RMS gold plays. RMS doesn't look too bad on the charts. It's holding up. So I presume the quarterly. I didn't read it, was fairly okay-ish.
Benign, yeah. Benign.
RRL.
Yes, the market didn't like that, did they?
Well, it has been a story that historically that we've always said keeps the better gold stocks like Evolution and NCM and but the market didn't like it, and that's if you're in that you would and I could understand maybe someone being in it, right? Because they had a nice little move a few weeks ago.
Right.
But I'll tell you what, if it looks like that, really I'd be getting out of that, Wolf, to be honest, maybe definitely if it looked like that by Friday.
I wouldn't even I'm waiting till tomorrow. That's not recovering. That's done.
I think it's done its dust. Yeah, just get out. Wolfie, VRS.
Yep.
Again, announcement, but below trend.
Yep,
so
you got to get out of that.
Yeah, not for us.
Yep.
Now let's talk about WA1 because you were.
I've been a champion of this story, haven't I, for a long time.
Well, you did you took a trading profit and you
Yep.
and you traded this, and you're really happy that you now become the greatest day trader in the world. You made 10%,
Yeah.
and I think you just given away another 10%
Yeah,
by.
I have. But it's your fault. Your fault because you make me work. If I had the time yesterday, right, to get in the morning to go and trade it, I would have, and I would have made another 10%. But unfortunately, I have to work for you. So
Oh,
there
all
go profits.
all right. I'll tell you what though, Wolfie.
Yes.
I think now's the time you buy it, isn't it?
Yeah, I agree. Look, long term, you can obviously see the chart on a weekly, definitely. And I think we're building up to some interesting results and the first resource update, I'd say. So this.
I'm gonna put it. I'll tell you what, Wolf. We're gonna put this on as a risky trade.
You
right?
like this? Yes.
Well, I think I think reading between the lines, right? I know what you like.
Yeah,
You
in my top 5 of resource stocks at the moment, right, to play with and trade with, right? I mean, I've been always talking about this as one of my favorites, so it's nothing wrong. And I didn't I put my neck on the line and said this could be a $10 stock.
Yeah, what's the market cap of? So it's
almost $1 billion now, I think.
$1 billion. So okay, definitely a mid cap.
Yeah.
And you know what? I think we go for it. And the question is, I think we got a pretty juicy stop around that 590, right? I think 590.
That's such a beautiful stop, isn't it? Yeah, exactly. I wouldn't worry about that. That's only about a 13% loss if it doesn't work for you. But I think, again, let me reiterate what I said many times over before. Stories like this, usually, if they are genuine, $1 billion market cap, right? So I am going to have a look at the market cap right now just to give you the full. And it is at the moment. Okay, well, it's still only 360. So there you go. That $10 is potentially a good one. But let's not be greedy. Let's start with that $8, right? That's our first target.
You know what's funny? I just put $8 in there already.
Yeah, and then we can reassess. But look, Dave, I mean, remember, we talked about it when we saw it first at $1, right? When we first had the discovery, right? So if anyone was still holding this, because there was really no reason for you to sell unless you've obviously quadrupled your money. Yeah, I understand.
Yeah.
You still be holding because we've called it right at the beginning. This could be great.
Yeah, no, I think it looks superb. Wolf, ODA had a great looking chart and a bit of sell-off and a little bit of annoying. And again, this is a real lesson for the lightly traded stories where I had a good contract win, and the news got out. So the people in there were buying the stock and taking profits today. And you know
what happened? Because people that probably word did get out. They're going to get a contract announcement win, but they're expecting an extra zero on there. $500,000.
Well,
$4 million.
maybe. Now ALC, it's nice to see. I mean, it's not for us at the moment, but it's a story that always had hope. It's just been in a horrible downtrend. This could break out, Wolf. This could break out tomorrow and could be an interesting trade, right? But
I tell you something, I think it will, and I'll tell you the reason why is just fundamentally speaking, much better quarter. They just come up with a quarterly today, right? So we had that really poor quarter. That was last time, right? Unfortunately, April, right? It's just killed everything. Then comes out the next quarter, much better, complete turnaround to negative cash flows to positive cash flows. They're talking now 40 million in revenues for the full financial year. I think, look, if that turnaround continues, then I probably see it over the trend. I wouldn't touch it yet, right? Because of course we need to wait for the momentum to build and keep going with it. But that's the problem with trading some of these smaller stories where one quarter can see that company come, crashing down. And then a quarter later, it's coming back up again because that's the nature of these small stories, right? They can fluctuate quite significantly. But I can see a recovery on the way here. It's too early for us to look at it.
Oh, all right. Now we've got Meta. Tell us what's going on with Meta. I mean, what a recovery since that.
Yeah, I know. What a recovery. And, that threads that they've come out with, which is the Twitter copycats. Instagram could do quite well. I think the revenues are pretty good. I had a look through the numbers, the commentary beats pretty much everything, Dave, and I think it popped overnight after market. Let me just have a look. Yeah, it's up 7%. So that's at $320.
Right, nice.
Yeah. So you can see probably you're going to have a pretty good Nasdaq tomorrow.
Okay, so has this is this a story which you're still skeptical about, though?
Yeah, because I'm skeptical about anything that relies on advertising. But I prefer a company that can sell a product or a service. Advertising is very fickle, even though they've got massive market positions, Google and Meta, and I think Google's maybe still the more dominant thing, because with Meta, Facebook, that can really change very quickly when you've got, when you look at the actual demographics of who uses Facebook, it's the older generation actually who uses Facebook. The younger generations, TikToks, Snapchats, whatever, right? They don't like Facebook. That's for sure. So there is a limitation on where Facebook can go. So for me, they just got to keep buying, look, I'm still skeptical, but I understand this is a quality story where it still dominates its positions significantly. So I'd still be trading this, no problems whatsoever. It's just long term, I'm thinking there is definitely more for me, quality and interest in some things like Apple, Microsoft, and some others that actually sell stuff.
All right, PME, Wolfie, looks a great looking chart, mate, a big contract win. CMM, a pretty strong little gold story, isn't it? So again, a very decent, Fortescue, holding up reasonably nicely, and MP1 breaking above 10.
Yeah, so basically, how they've got that big green candle about 3 weeks ago, which they updated the market saying they're well ahead of market expectations in regards to cash flows, because again, all these companies are going through their books and making sure that they can actually get profitability as quick as they can. The quarter they've just released the quarterly this morning, and that's pretty much rubber stamps what they've talked about 3 weeks ago. So you can see that pops now. So it just gives validation to the investors out there, the traders out there, that this is possibly back as a trade again. So, can it hold at $10? If it does by the end of the week, then probably there's a trade there to $12.
Absolutely brilliant. Now, Wolf, and we're talking about earlier in the week about things like DHG, and look how good they look now. REA. So I think again, REA really ever since that buy signal, what a move that's been, and even DHG after that breakout.
Yes.
Anyway, Wolf, some good moves. Really pleased. We've got some trades on, and we've got live tomorrow Friday from 12 to 1:30. So we hope to see you all there. And we are doing a Cincinnati trading course on Saturday. So if you want to learn the magic of the CTM, come on, guys, join us. It's I find it crazy that everyone doesn't do it. Especially. It's like I think everyone that does the course have said to us they can't believe they were even joined Equities Story. They're members for 3 years and didn't do the course. They go, what a mistake. You have to do the course. If you don't do the course, you're missing out on a lot. On that note, Wolfie, thank you very much, and hasta mañana.
Thanks, guys.
Thanks, Wolfie. Bye-bye.